Hi guys, Michael here, and in this video we will discuss the one key thing that will make you a profitable trader. So this thing exactly is the risk-reward ratio which you should be using in your trading strategies. So the problem is for most traders that they often use the same lot size in all of their strategies despite the different time frames they are trading. So in that way you are not be able to control your risk, to manage your risk. Therefore you don't know how much you can risk for a particular trade. You're just, blindly trying to impose some numbers like 1%, 0.5% in pips, etc. So in this video I will discuss and show you how it should be done correctly. Therefore you will be able to implement it further in your trading strategies, and you will be able to therefore filter all of the good strategies and how you can possibly, even the mediocre strategy, how you will be able to, improve it in some way. So let's dive into details and check some examples. How does it work? So the minimum risk reward ratio which you should be using in your trading is 3:1. This is the minimum that you should be calculating. So what I have mean by that? It means that for each particular trade you are risking 1% of your capital, and the potential profit, which is for example your take profit level, is at least 3% of your capital of your trading account. And you shouldn't calculate it by anything else, by money or pips. This is irrelevant, and I will show you on this particular example. So if you are calculating by percentage, so your number which you are risking, which is, for example, you have 10,000 on your account, you have 10k, it will be 100, let's say, US dollars. So it doesn't matter if it will be 30 pips stop loss or 10 pips stop loss, you will be always risking $100 because that is the percentage, that is 1%, and your potential profit will be 3%, which is in this example will be $300, right? So either way, if you are, for example, trading a scalping strategy, so most likely you are trading on lower time frame, which means that your potential take profits and stop losses will be tighter than if you will be trading on with a swing strategy on higher time frames like H4 or daily maybe, or even weekly, for example. So therefore your stop losses and take profit will be wider, but the risk that you are taking should stay the same. So here you have on this example right here, 30 pips will be this $100 that you are potentially risking, and also right here the 10 pips should also be the $100 that potentially you are risking. So now the next step is to how to calculate the lot size for this particular trade. Well, the most easy to use tool you can find for free, the calculator to calculate the lot size on, for example, MyFXbook. Okay, so I have the calculator in front of me right now. As you can see, you need to go to myfxbook.com, go to calculators tab, and choose the position size calculator. It is free to use, you don't need to even log in or register or anything like that. So let's choose the settings. The currency pair that I want to conduct a trade, Euro USD, I can agree on that. For example, account currency, most of the time I use euros. Account size, let's say I have 10,000 on my account, 10,000. Risk ratio, I want to risk 1%. Stop loss in pips, on our example we were having 30 pips, so let's stay like that. Trade size, so it should calculate it in lots, so let's leave the one that was here and click calculate. So as you can see, it calculated that the 1% of our account is 100 euros, and the size of the trade I should take is 0.4 lots. So therefore I need to go to my MetaTrader platform or other platform that you use and choose this position size. So as you can see, it doesn't matter how much pips is that, because it differs from the strategy and the time frame you use. So for example, it should never exceed the amount that you have calculated from your deposit. Okay, now let's move forward with the video and to check the examples based on which you will be able to determine why the risk-reward ratio is so important. So let's move to the side. I have this example right here. Okay, so we had the strategy based on which we conducted 10 trades, out of which 5 were profitable and 5 were unprofitable. They gave us losses. So the results are as follows. The wins gave us 15%, and the losses were 5%. When we deduct the losses from the winners, we have overall profit of 10%. So as you can see, you don't have to be, for example, most of the time right on the market. The profitability of the strategy don't need to be always like the 80 or 90%, right? When you have the correct risk-reward ratio, 50% is enough to make a profit from the market. So that is the key to trading on FX market. On top of that, let's check another example, a little bit worse case scenario, but where you will see how the math when you are using the correct risk-reward ratio is on your side. So let's slide to the right side. Oops, I have a small error here. Should be 3. So the same 10 trades, but out of which only 3 were profitable and 7 were unprofitable, which gave us a loss. So the total is for the profit is 9% and for the losses is still only 7%, which gives us overall profit of 2%. So as you can see, even if only 3 out of 10 times you will be right, you will still be profitable. So as you can see, guys, this is a very simple math, and this is no rocket science. If you are using correct risk-reward ratio, the math checks out and most of the time is in your favor. So we can compare it for any other business. So as you can see, when you are calculating the positions or any other investment, the potential profit should be 3 times at least greater than the potential loss. So without a shadow of a doubt, I can tell that if you apply that rule to any other of your financial decision-making process, you will end up with more money in your pocket overall. So at the end, thank you for watching, guys. If you are not already, so subscribe to this channel, check our other social medias, the Instagram and TikTok. I am also posting stuff like this over there. So yeah, just follow for more and take care till next time. Bye-bye.